What's going on, everyone? Charlie here. We have a filing sitting on the register out of Finra. Now, this is SR Finra 2020-04, order approving a proposed rule change to adopt Finra Rule 4111, restricted firm obligations, and Finra Rule 9561, procedures for regulating activities under Rule 4111. So as you can see, this has been going on for quite some time. Here's the timeline right here. Filed November 16th, 2020. January 12th, Finra consented to an extension period lasting until March 4th. On December 4th, it was published to the register. And then on January 12th, it was extended till March 4th. And then on the 4th, they extended it until the 7th of May. And then on the 7th of May, Finra consented yet again to another extension to July 30th. And then finally on the 5th, which is tomorrow, it's scheduled to be implemented into the Federal Register. So the description of this, Finra's proposed rule change would adopt new Rule 4111 to address the risk that can be posed to investors by broker-dealers and their associated persons with a history of misconduct. Then the super note linked to that says, as discussed more fully below, the proposed change would apply to firms who, based on statistical analysis of their prior disclosure events, including regulatory actions, customer arbitrations, and litigations of brokers, are substantially more likely than similarly sized peers to subsequently have a range of additional events indicating various types of harm or potential harm to investors. It would impose new obligations on broker-dealers with significantly higher levels of risk-related disclosures, including notably sales practice-related disclosure events, than other similarly sized peers based on numeric threshold-based criteria. Specifically, they're proposing to adopt the Rule 4111, or the restricted firm obligations, to require member firms that are identified as restricted firms to deposit cash or qualified securities in a segregated account, adhere to specified conditions or restrictions, or comply with the combination of such obligations. Interesting. Supernote 13 defines a restricted firm identified through the proposed multi-step process to have a significantly higher level of risk-related disclosure than similarly sized peers, and determined by Finra to pose a higher degree of risk to the investing public. So they're basically looking out to identify high risk, highly exposed firms that are posing significant risk to the public, and they're proposing Rule 4111, where it basically requires a firm to deposit cash in the event they are determined to be restricted. So again, they keep talking about protecting investors, yada yada. They always like to say that. It said that this rule should create incentives for firms to change behaviors and activities, either to avoid being designated as a restricted firm or lose an existing restricted firm designation to mitigate Finra's concerns. So Finra observed that such firms and their associated persons often have substantial numbers of reportable events on their uniform registration forms. In such situations, Finra closely examines the firms and registered representatives' conduct, and where appropriate, they will bring enforcement action to bar or suspend the firms and individuals involved. Yet to see that, all I see is really cheap fines getting slapped on them. And as I went through this filing, it gets progressively worse, because it says right here, however, Finra states that individuals and firms with a history of misconduct can pose a particular challenge for Finra's existing examination and enforcement programs. Specifically, examinations can identify compliance failures or imminent failures and prescribe remedies to be taken, but examiners are not empowered to require a firm to change or limit its business operations in a particular manner without an enforcement action. So they're saying, without first getting an enforcement action taken against you, there's no empowerment to require somebody to change or limit its business practice, without documentation backing it. While these constraints on the examination process protect firms from potentially arbitrary or overly onerous examination findings, an individual or firm with a history of misconduct can take advantage of these limits to continue activities that pose risk of harm to investors until they result in an enforcement action. And then all the IDs are blank for some reason. Don't know why. This filing is not that great, honestly. Now, the proposed rule specifically would establish numeric thresholds. Basically, it's just a structure that identifies what makes them fall into that criteria of a restricted firm. It's all based on Finra's interpretation, which I don't really like because I'm again never been a fan of Finra. Thought they're a big part of the problem this whole time. Sorry, David Lauer. I just don't see any significance in any of the rules you propose. So, following a multi-step process of evaluating a member firm, the Department of Member Regulation would be permitted to impose on member firms it determines pose high risk to the investment public a restricted requirement deposit or a restricted deposit requirement, which basically all that is, it is a percentage of their net capital in excess of their net capital over the course of the previous 12 months or the next 12 months. And basically, if you're determined to be an at-risk firm, the process works like this. They determine if the firm's maximum restricted deposit meets the preliminary criteria for identification. Member firm proceeds to consultation with the department if that is the case. Now, in consultation, the department would seek to tailor a firm's maximum deposit to its size, operations, and financial conditions, and determine the member firm's maximum restricted deposit requirement consistent with the objectives of the rule, while not significantly undermining the firm's continued financial stability and operational capability as an ongoing enterprise over the next 12 months. During the consultation, the department would give the member firm an opportunity to demonstrate why it does not meet the preliminary criteria for identification, why it should not be designated as a restricted firm, and why it should not be subject to the maximum restricted deposit requirement. So while everything up to this point sounded great, now it's kind of like starting to backtrack a little bit. A member firm may overcome the presumption that it should be designated as a restricted firm by clearly demonstrating that the department's calculation is inaccurate because, among other things, it considered events that should not have been included. A member firm also may overcome the presumption that it shouldn't be subject to this deposit by clearly demonstrating that such an amount would cause significant undue financial hardship. No, you can't impose this because it's going to make me go into hardship financially. So I need to continue breaking the law so that I don't have to suffer. In summary, if they're found in violation and can't talk themselves out of it, they would be imposed a required restricted deposit that they must contribute. Now, pursuant to the rule, a currently designated restricted firm would not be able to withdraw all or any portion of its restricted deposit requirements or seek to terminate or modify any restricted deposit requirement, conditions, or restrictions that have been imposed pursuant to this rule without prior written consent of the department. Now, the other rule they're imposing, procedures for regulating activities under Rule 111 and amendments to Rule 9559. Basically, 9561 would establish new expedited proceedings that would provide an opportunity to challenge any requirements the department has imposed, including any restricted deposit requirements, by requesting a prompt review of the department's decision in the Rule 4111 process and address a member firm's failure to comply with any requirements imposed under that rule. In general, a request for hearing would not stay any of the Rule 4111 requirements imposed in the department's decision, which would be immediately effective. Basically, this is what I was talking about a second ago. There is one exception. When a member firm requests review of the department determination, they would have to deposit 25% of its restricted deposit requirement or 25% of its average excess net capital over the prior year while the expedited proceeding is pending. So basically, if they want to challenge the decision from Finra to designate them as a restricted firm, they would have to deposit 25% either of their restricted requirement or 25% of its average excess net capital over the prior year while that proceeding was being taken into account. So this exception would not be available for a member firm that has been redesignated as a restricted firm and is already subject to previously imposed restricted deposit requirement, which it would need to keep the assets on deposit in the restricted deposit account until the Office of Hearing Officers, or NAC, issues a written decision. So basically, in essence, what does all this jargon mean? Finra filings suck. I don't like them. They're boring. The proposal to establish a process in new Rule 4111 to identify member firms that present a high degree of risk to the investing public based on numeric thresholds of firm level and individual level disclosure events, and then impose a restricted deposit requirement, conditions, or restrictions on the member firm's operations, or both, will help protect investors and encourage such member firms to change their behavior. Don't encourage them, force them. Encouraging them will do nothing. Sorry. Basically, Finra has designated the proposed rule change to establish an annual multi-step process to determine whether a member firm raises investor protection concerns substantial enough to require the imposition of additional obligations. So that's in essence right there. This is basically it, right? Hold on. No, not yet. That was the multi-step process to determine whether a member firm raises investor protection concerns substantial enough. So they can raise investor protection concerns. They just have to be substantial enough to raise this flag here, while allowing identified firms several means of challenging Finra's decisions and affecting the ultimate outcome. I'm done. I'm done with this Finra crap. By the way, it's effective 180 days from tomorrow. Hey, you learned something. Stay jacked.